Amidst concerns over Mumbai's water supply, official data show that the city's 7 lakes were at 9.34% capacity as of 6 a.m. on the 19th of June. Officials say the immediate concern is not water shortage, but the possibility of a weak monsoon. The Mumbai Municipal Corporation is taking precautionary steps in anticipation of below normal rainfall. For now, there is no need to panic, but adequate monsoon rains in the coming weeks will be crucial to replenish the city's reservoirs and ensure steady water supply. So concerning development, of course, there in Mumbai, BMC taking precautionary steps as well. Remember this, of course, even as rainfall has been below normal as of now. Of course, it all depends now on the monsoon ahead, how adequate it is to replenish the city's reservoirs and ensure steady water supply. But for now, data shows that the city's 7 lakes were at 9.34% capacity as of 6 a.m. this morning. Shweta is joining us for more on this story. Shweta, how concerning is this data and statistics?
Well, absolutely. As far as the water crisis in the maximum city of Mumbai is concerned, we understand that only 10% of water is left in the dams. Now, remember, Mumbai gets water from 7 dams, and as per the data and the statistics what we have received from the BMC, the civic body clearly states that it's less than 11%, and they have been ensuring several measures for citizens so that there is no misuse of water. With this, they have also stated that there would be 20% of water cut in industrial uses and newly constructed house. And if we speak about elite society and swimming pools, even BMC is not providing water there also. So completely, we are seeing the blanket measures that has been taken by BMC for the dealing with the water crisis. They are trying to compact the certain measures that people do not misuse water. Remember, they have also very clearly stated that people, those who are found guilty of misusing water, will be penalized.
Thank you for joining us with those details. Now, stocks of major Indian information technology companies have fallen as much as 7% on Friday after global professional service giant Accenture lowered its revenue guidance, soaring sentiment towards the sector. Shares of India's largest IT company, Tata Consultancy Services, were also down over 5%. Infosys dropped more than 7%, while Tech Mahindra declined over 4%. The benchmark Nifty IT index slid more than 5%. Accenture on Thursday cut its revenue growth guidance for the financial year ending August 2026 to between 3 and 4% from its previous forecast of 4 to 5%. Let's in fact take a look at what the report really said. What has soured sentiment in the manner that we have seen today? Stock market crash, of course. The Accenture report has led to this. What does the report say? Let's tell you. Accenture sharply cut its financial year 26 revenue forecast and growth guidance to just 3 to 4%. The reported Q3 results with weaker than expected bookings and revenue miss as well are what led to that cut in growth forecast. Highlighted continued client caution, delayed decision making, and also slower than usual deal conversions. These are all factors, these are all reasons that have led to this decline. Signaled prolonged softness in discretionary tech spending, especially in North America and Europe. Again, a factor highlighted by this report. Also noted that AI transition is disrupting traditional outsourcing and services revenue as well. Meanwhile, overall gloomy outlook has triggered heavy selling, of course, in Indian IT stocks, including TCS, including Infosys, including HCL Tech, including Wipro, and also Tech Mahindra. Joining us to decode this and discuss what has led to this is Sharad Kohli, senior economist. Sharad Kohli, thanks for being with us on NewsX today. This is, of course, a very gloomy Friday. Looking at these Accenture report findings, what do you make of what they've said in the report and what impact it had on IT stocks today in the stock market?
Well, good evening, Uday, to you, my fellow panelists, Dr. Bhattacharya, and of course, NewsX viewers. I think this was quite expected. I mean, it hasn't come to me as a surprise because IT industry has been under pressure. There were phases when there were signs of the recovery. But then we should not forget that some of the clients of TCS, Infosys, Wipro, HCL are also the clients of Accenture. So there's some common clientele. There's obviously the client outlook is not looking very, very great. A partial reason has been Middle East war. A lot of business has been lost because of Middle East war. I mean, some of the businesses which were likely to come from America, from Europe, and other parts of the world, they have postponed their new businesses. They have postponed their expansions. They have postponed their organizational, restructuring and new business arms. So all that has been postponed. Let's wait and see. So that is putting a gloomy picture. Although the war may have temporarily ended, this is just a 60-day, I would say, suspension, because there's more to come after 60 days. So the outlook is gloomy. And let's not forget, Uday, the AI factor, which is very important. I think a lot of tasks like coding, back-end work is being now, I mean, the companies are contemplating, can we get it done from AI? Do we really need an IT service provider, and so and so? I think those questions have already cropped up in the boardrooms. And that has also painted a bit of a gloomy picture overall. I think the problem has been that some parts of the world, reskilling and upskilling has been slow. I would say, like, for example, in India, we are about a couple of years behind in terms of AI. And most of our companies are getting businesses from the US. US is one of the mainstay as far as businesses are concerned. And US itself is slowing down. But let's not forget today, I mean, even before the war happened, there was this whole tariff game, which happened from 2nd of April 2025, which had slowed down the American economy considerably. I mean, look at the GDP numbers of US, 1.4%, 1.3%. And that too, I feel, may not be the real numbers. The real picture is that a lot of these developed countries, shall I say so-called developed countries, they are in recession. We saw the UK numbers coming in the negative, a negative GDP growth, because if you are in negative for 2 consecutive quarters, you are technically stamped as being in recession. So I think to avoid that situation, there's a very dangerous trend, which is, I spoke about this on your show a couple of days earlier as well, that there is a dangerous trend which is now developing where the countries in Europe and America, for that matter, they are not admitting they are in recession. They show a GDP which is 0.7%, 0.2%, 0.8%. That for me is no growth. But then, just not to get the stigma of being stamped as a country in recession, they try and stay afloat by giving a positive number. So I think it is indicative of the recessionary trend. I hope things improve. I mean, unless the inflation cools down, because inflation has gripped America. Look at the gas prices, about $5 a gallon. Cost of living in America is significantly up. The input cost for various industries across America is up. And I think that's where the companies try and cut cost. They don't want to engage expensive IT companies. So it's a mix of all this, Uday, as far as the bottom lines are concerned.
Okay. Let me, in fact, also quickly rope in at this point Jaideep Bhattacharya, President CDEP, who joins us as well. Jaideep Bhattacharya, the Accenture report findings, what you make of them, of course. Do you believe it is something that will lead to a pessimistic outlook for this sector? Is that what has led to this slump in IT stocks today?
Absolutely. If the AI stocks are going up, then what is coming down? Because the AI stocks are basically disrupting a large number of industries, including primarily the software development industry, which was a very, very large industry. Now, this was seen as coming, but people were not sure whether the tools and technologies out there are realistic, whether they can really change the way coding is being done. Now, what we're increasingly hearing is that the large clients have their in-house capability to use the AI tools and develop what was initially being outsourced to companies such as Accenture. And therefore, the actual financial results are a verification of that trend. Increasingly, we are hearing that when large IT companies are going to their clients, the clients are pretty much saying, hey, what is the extra value add you're providing? Because what you're going to do, I'm going to do it in-house using IT tools, using the AI tools. And that's primarily the driver why the IT stocks in India have also fallen by about 3 to 8%. I think Infosys has fallen by 8% because the whole model is now getting questioned. So the market is in a transition. People need to move from simple projects to far more complex and larger projects because the cost of delivery has come down. So the consumption will go down, but that will not happen overnight. So yes, the IT services will still be needed once the consumption level goes up, because the cost of delivery has really come down due to the AI disrupting the way software is developed. So we're going through this period of disruption where we will see the AI stocks going up while the IT stocks coming down. And as I said, they're complementary because it is AI which is disrupting the IT stocks. Now, it is interesting to note that what Accenture said yesterday in its initial declaration, that they missed the Q3 targets because of the war and because of muted spending capacities of the US companies. But the market read it more as a long-term impact of AI, which is why there is expected there will be more substantial fall in the stocks as we move forward.
All right. In fact, we're getting some breaking news coming in this hour. Indian benchmark indices have ended in positive territory on the 18th of June after a volatile trading session, with the Nifty closing above the 24,150 mark. Sharad Kohli, senior economist, continues to be with us on this big story. Sharad, the markets have bounced back. It seems Nifty has ended in the green.
No. I think your editorial needs to correct itself, Uday. The markets have ended in the red today. They have not ended in the green. Please, you can ask your editorial to double check. I think it was primarily because of the pressure on the IT counters. Having said that, Uday, more importantly, to add to what Dr. Jayji said, because if we correlate markets with the report of Accenture and...
Right, you're right. I just want to quickly point that out. The latest, of course, is that 0.64% was the close for the Nifty. That is in the red. It is down by 0.64%. It has closed at 24,013. That's down 154 points today. Yes, Sharad Kohli, go ahead.
So I was just trying to correlate, Accenture's report with the IT company, closures at stock market. I've been in the stock markets. I've been watching stock markets for more than 35 years now. Now, I have something very important to say here. I feel stock markets are babies. They react like babies. One fine day, Accenture report comes, and down comes Infosys, down comes Wipro, down comes HCL, and so on and so forth. And the next day there is something happening there. You get one good result, and it goes up. So I think stock market reactions should not be taken too close to the heart, especially these temporary ones, 1 day or 2 day here and there. Because we saw that a few months ago, IT stocks had taken a lot of beating, but then they started recovering. So stock market goes through phases. Stock market goes through a rotational process as well. There's an odd sector going up, there's an odd sector going down. But what's more important is that it's now the need of the hour, and I think Dr. Bhattacharya would agree with me, that these Indian IT companies who were traditionally for the last 2-3 decades, they've had their very trustworthy clients in the US and other places. They need to upskill and reskill, the same back-end work, outsourcing, coding work. I think that may not be the future of IT, because some of the companies have already applied the AI tools and are cutting down the orders. But this particular Accenture report, let me be very focused now there. This particular Accenture report is primarily because of the slowdown in the US due to war, and before that due to tariffs. Because the whole tariff game, which went on from 2nd of April, that slowed down the economy. It brought in inflation. Supply disruptions were there. Companies had to hold back their expansions. Companies had to rethink about the new business. Well, what is IT all about? You want to automate, you want to start a new wing, you want to start a new arm, and you need IT systems to integrate your whole business together, and so on and so forth. There's so many models which IT works on. But the tariff game and followed by war, that disrupted the businesses across. And then why forget the H-1B problem, which President Trump created, the H-1B restrictions. Let's not forget a lot of beneficiaries of H-1B, they come from IT sector. So all combined together, well, I would put AI in the backseat as of now, as far as this particular Accenture report is concerned. I would put this last year's disruption occurring because of tariffs first, and then the war. And this is going to take some time to recover. I was amongst the first people in December 2025, Uday, who said that we can look forward to a clear recessionary trend in 2026. And I won't be surprised if for the developed world, this recessionary trend walks into early part of 2027 as well. Uday.
All right, stay with us. More breaking news, in fact, now coming in. The Sensex has slumped down by 607 points today amidst the IT stock crash. It has closed at 76,802.90. Jaideep Bhattacharya, Sensex down by over 600 points today. Jaideep, can you hear me?
Yeah. So it's basically the tech stocks which have weighed down on the Sensex. And as you were pointing out, there was a bit of a recovery. Therefore, the massive amount of dip that happened in Nifty recovered towards the end, although it did end up still in the red overall. And that happened more because of expectations of profit booking and so on and so forth. But overall, the sentiments have gone negative. These fluctuations in the IT stock, and as Dr. Kohli rightly pointed out, happened when Cloud came out with their declaration that their next tool is going to bust the IT services, and it turned out that it did not. And then again, they came out with a more powerful model, and so on and so forth. So we see that the market is moving towards responding to these tools, which are getting more and more matured at a much quicker pace. And every time there's an announcement, as Dr. Kohli rightly mentioned, the stock market responds quite erratically. They go on the other extreme because there is an information deficiency. There is a gap in between what is really happening and the tools available versus what the investors understand. Yes, there has been a lot of other factors, but largely the perception. And as stock market is driven by perception, the perception really is that AI is coming here to bust the existing IT services model. However, if you listen to what the Accenture CEO is saying, she's saying that, well, there's actually a lot of spending happening for businesses who are trying to get onto the AI bandwagon because they need help. And therefore, a lot of new revenues of Accenture is coming because of companies trying to use AI. So it's a mixed bag. As I said, it's a transformation happening. But clearly, as the financial year of Accenture ends, which is end of August, it'll be their actual revenues will be less than their forecasted revenues, and that will mirror with every other IT company, and most of them are in India, and that's really what is impacting the heavy IT stocks, which is now pulling down both the Sensex and the Nifty.
Yes, indeed. Do you expect this sentiment to carry forward to next week, Sharad Kohli, or was this just something for today because of the Accenture report?
So typically, when a report like this comes, you do see 2 or 3 sessions. Well, we should not forget market has got a very short memory. Also, it moves on. By that time, probably something bigger would come out. There would be another trigger maybe in the opposite direction, and things start picking up. But yes, market does remember these kind of reports for some time, and the pressure would remain for first 2 or 3 days. Of course, it's very hard to predict market. They say one should never predict the market. But then there's a lot happening around the world. I hope President Trump now, because we are primarily talking of the US, I hope President Trump, after having done whatever the surrender or the deal or the compromise, whatever you want to call it, he'll focus on his economy for a change. He's been focusing on Strait of Hormuz.
Let's put out the corrected Nifty numbers as well. Breaking news coming in. Nifty IT index has plunged nearly 6% after Accenture cut its revenue growth guidance and flagged a weaker demand environment, reviving concerns about the pace of recovery in global technology spending. At 9:20 a.m., the Nifty IT index was down 5.8%, making it the worst performing sectoral index by a wide margin. So it did recover a bit, but still in the red at close. Sharad Kohli.
Yeah, yeah, it did recover, but then, it's the closing that matters, because I just wanted to point out it closed in the red. So I hope President Trump focuses on the economy, because the economy, as far as America is concerned, is in doldrums. Believe me or not, I have a 10-member team who's exclusively analyzing global economies, and America is on the top. Their debt has now climbed to very close to $40 trillion. The cost of living is very, very high. He's in a hurry to bring down the crude prices. They have come down. But then, the impact of crude oil prices settling down, it takes about 2 or 3 months. By the time the supply is normalized, by the time, the goods already manufactured at higher cost, they get into the system, they get sold out, and then the next lot comes, which is at a more reasonable price. America, for situation to improve, if you want to get an Accenture positive report, situation on inflation in America, Uday, has to improve. 4.2% inflation for America, when their so-called repo rate, or whatever they call it, 3.5 to 3.75%, is very high inflation. Ideally, Fed should have increased the rates, but they did not, because Kevin Walsh is a Trump man,
Okay.
and the rates were not increased. So I feel they have to bring down
Okay.
inflation. Until inflation comes down, don't expect any magic from Accenture or anybody else as far as guidance is concerned.
All right, let's leave it at that. Sharat Kohli and Jaideep Bhattacharya.